Hi, my name is Bev Lewis, and today we are going to share some tips on how to get a mortgage after a divorce. Hi, my name is Bev Lewis, and I'm the founder and president of Positive Solutions Divorce Services, where we save money for clients that are going through separation and divorce, unnecessary legal fees, and we guide them step by step through the divorce process. I am here today with my guest and colleague, Rob Tarasio. Rob is a mortgage agent. He is with the Mortgage Center, and he has been a mortgage financial specialist for the past 15 years. And Rob's passion is helping clients to find the perfect mortgage solution for their needs. Welcome, Rob. It's great to have you with us today.
Thanks, Bev. I'm very happy to be here.
I do divorce mediation.
Yes.
And I have clients that come to me because they require a separation agreement. And that separation agreement is used for many different issues, items, okay? The separation agreement outlines the terms of their parenting, how they're going to parent their children, how they're going to divide up their assets and their debt, if there's going to be life insurance, if there's going to be medical and dental benefits. The other thing that they need it for is to show the mortgage specialists if they're wanting to repurchase a home after they separate, so they sell their family home, then they're going to repurchase a new home, they're going to need a mortgage. Right. So they need the separation agreement that details all of those agreements that they've made on who's going to take over what assets, who's going to take over what liabilities, if there's going to be child and spousal support that's going to be paid from one party to another. So they need to then bring that separation agreement to somebody like you as a mortgage broker in order to obtain approval.
Right, correct.
So what is it specifically that the mortgage lenders are needing to see in that agreement?
Bev, yeah, you've made a very good point in that the separation agreement is a document that's very important to lenders because it helps to outline clearly what the level of liabilities are with the client, assets, income. So it helps to clearly define that. When a client is in a relationship with a spouse, those things are already clearly defined through that relationship. But once a client is actually severing that relationship and dividing the union that they previously had, now it's a question of, well, how does their debt get divided? How do their liabilities get divided? Their assets get divided? And the lenders need to see what that looks like in order to properly assess the client's, let's say, worthiness for financing.
Right.
It'll also define perhaps a client's new debt obligations with respect to if they were in a situation where they are having to provide support payments. So that is considered a debt obligation.
Okay, so I have a client that I'm working with right now, a younger couple. She's a stay-at-home mom. She hasn't worked for 10 or 11 years. They've got a couple of kids. Dad will be paying most likely child and spousal support to her. Is it possible for her to get a mortgage with only having child and spousal support coming into her? So that income will be coming to her, but at this point she doesn't have a job outside of the home.
Well, it's a good question, Bev, and it's not an easy answer. And the reason is because there's many other elements that fall into play when applying for a mortgage, including credit, level of credit or credit score. As an example, has clients worked in the past? What kind of industry were they in the past that can be transferable into their new life? So when we're putting together a mortgage application, it's really a cross-section of the client. So many elements get put into that application and presented to the lender, and many times it's a call that the lender will make to say, I kind of see what's going on here, and I'm willing to make a favorable call in this direction for the client. So having said that, the answer is that it is possible. There's just a number of different other elements that need to be taken into consideration. Down payment, income, and credit. Those are the three most important. And then there's other areas as well. Credit is like a report card that a lender will look at to see, historically, how has the client managed their debt in the past? Have they been paying on time? Do they maximize their credit limits? How extended are they in their credit? So it gives the lender a snapshot of how the client performs with respect to managing their debts. So when talking with about people going through, let's say, a difficult time in their life, like a separation, I've found that people almost sometimes not forget about, but they don't focus as much on their debt obligations because they're going through this emotional time. And sometimes it's also there's a conflict going on because one of the spouses used to take care of all the credit facilities and obligations, and now they're going through this traumatic time that that starts to slip. And what happens there is then that credit is recorded, or that situation in their life gets recorded with respect to their credit, and the lender sees that on their credit bureau and sees that they've maybe missed some payments. They don't really look at why they've missed payments, they just see that they have. So with respect to credit, my advice to people, especially going through a traumatic time, is pay very close attention to your debt obligations. Really talk to your spouse or each other about how are we going to manage our credit during this time, because it will affect both of them when it comes time to reapply in the future. Right.
And how long does it take to get your credit back up to a certain rate that they can actually be approved for mortgage? So if they have really bad credit, how long would it take? Can they ever get back up there, and what do they need to do, and how long does it take for them to get there?
It depends on what's going on in their credit report. For instance, you have clients that have a poor score because they don't have enough credit lines, as it's called. There's not enough credit evidence to provide a strong score. Well, we encourage the client to get additional, maybe another credit card, and use it even at a minimal level. Start using it and paying it off on time. Always pay as a minimum the minimum amount required on time, and just use it just normally, and that will help to show a credit history. With people who have had a poor credit rating due to poor payments in the past, those people, the encouragement for those people is to start making payments on time. on a regular basis. It may take a little bit longer to get the scoring up again, but I would say that you'll start to see a difference in the score within the first 6 months. And then within the year, it could be drastically different. Yeah.
Okay.
Yeah.
Okay. And then what about income? Because you touched on income a little bit. So is there a percentage that the mortgage lenders are looking for when it comes to how much the income is versus how much of a mortgage that somebody could take out?
Well, income is very, very important to a lender because they need to feel that the client can support the monthly payments on a monthly basis. So there are guidelines that are used to measure income. So let's say the rule of thumb is that 40% of your gross income is permitted to be used for your mortgage payments, which is principal and interest, and also for your property taxes included. So on that basis, so if someone is making X amount of dollars per year, 40% of approximately 40%, because different lenders have different guidelines. So we'll just say as a magic number, 40%. Only 40% is permitted to be used for principal, interest, and taxes. And so we have to make sure that a client has enough income per month to be able to show that they can easily support and manage their debt. When you're dealing with a mortgage broker, the benefit to the client is that we deal with many lenders, including trust companies and insurance companies. So we are able to
private
offer
lenders as well.
Private lenders.
Yeah.
So we're able to offer the client a lot more choice, a lot more options, and a lot more flexibility, just because of the number of different lenders that we deal with.
Right.
Yeah.
So in my case, I was banking with one of those big five.
Yeah.
And for basically since I was a little girl, that when I started putting in my allowance into a bank account, and I got my first 3 mortgages through that bank, and although I was employed as a full-time employee, and the day that I decided to go out on my own in my own business and not have that steady stream of income coming in, we sold our house and we were preparing to purchase another one, and we were denied a mortgage through that same institution that I had been dealing with for 25, 30 years. So that's when I started to look outside of that bank, because I didn't really have any options, and that was the first time that I found a mortgage broker, and I had no problems being approved at all. So it was really nice to have a different option to go to in that situation.
It's a very common situation that people fall into. But again, I mentioned that banks, they have their comfort level and their lending guidelines, and it doesn't really matter so much in terms of what you think your relationship is with your bank, because they need to stay within those parameters of their guidelines. So if your particular mortgage application or situation in life is a little more complicated, a little bit outside those lines, then they're not comfortable lending outside those lines, and
so that could be for somebody that's going through a separation or a divorce as well, because they've been with the same institution for many years, but their situation is now changing, and they may not be approved through their traditional bank that they've been dealing with for a long time. But reaching out to a mortgage broker, they have more options that they can be provided. A lot more options. So, we're able to be a lot more flexible in terms of, as mortgage brokers, we're able to be a lot more flexible because we deal with many lenders who have different guidelines that can fit all of the various different types of
human situations that are going on.
Right, right.
So that benefits the client because it also helps find not just an approval, but also what type of mortgage product can we find you that actually suits your needs. It's going to work for you.
Right.
And it might be something that gets you to, that transitions you from where you are into where you need to be temporarily, and then moves you forward into your next phase. So it could be a transitional step as well. I would say that the two, with people that are going through a separation, definitely the most important thing to focus on is a separation agreement. Mm-hmm. Because we really, literally can't go forward without it. Have an open conversation about their debt obligations, about their credit and their debt obligations. What's happening? Who's going to maintain the current mortgage payment? Who's going to maintain the car payments? How are we going to make sure that our debt obligations are always managed on time, as expected by the lender or the creditor, and maintain that? Because once you're ready to go, and you have your separation agreement in hand, and you're ready to move on to the next stage in your life, that credit bureau is coming with you.
Yes.
And you need to make sure that it's in good shape.
Right.
Okay, or else we're into a reform type of time frame to get it reformed, to get it fixed up, and that could take 6 months to a year. We don't know. So
yeah.
it is an easy fix in a proactive way. Mm-hmm. So if you're going through that, if you see something is happening and the relationship is breaking down, have an open conversation with your spouse about how are we going to manage our debt obligations, and that's going to help both parties.
And that's something that I see in mediation quite often, is that one party, they share a bank account, and both spouses are putting money into that joint bank account, and then all of a sudden they decide that they're going to separate, so one person stops contributing to that bank account, and so there's not enough money that's coming in to pay those bills. And so that's actually something that we help clients with in mediation, is to determine exactly what you've said. Who's going to pay the mortgage bill? Who's going to pay the hydro bill? Yeah. The insurance, who's going to pay all these things? Because they need to be paid, and if you don't pay them, there's going to be problems in the long run, right? So
exactly.
So that's actually something that we help guide them through, is who's going to pay those bills, and ultimately the separation agreement we can provide so that they can take them to you for your mortgage.
And whether that breaks down through just sometimes that those debt obligation. Sometimes the focus of maintaining the debt obligation falls apart because there's too much else going on, and they miss payments and they forget. Right. So but sometimes it happens almost intentionally, where I see some clients saying, "Well, I'm no longer living in that home. I've been removed from the home. Therefore, I'm not going to contribute anymore."
Yes.
And
there are issues with that,
and there
too.
You go.
So come to mediation. Let us get all that resolved for you, and then you don't have those problems going forward.
That's right. And what happens is it just hurts. It literally hurts both parties.
Right.
When that happens.
Absolutely.
No one is saved from that. So.
Well, thank you so much, Rob. It was a pleasure having you here today and giving a little bit of information on the mortgage end of things and what you do and how you can help clients. And I really appreciate you spending some time with me today.
My pleasure, Bev.
Yes.
And if any of anyone watching, any of your clients has any other specific questions that they'd like to ask, please feel free to reach out.
Absolutely. Yeah.
Be happy to help.
Thank you.
My
Have
pleasure.
a great day.